All right, everyone. Guess what? Michelle and the Money is back. We were off for a couple weeks. Spring break. Yeah. You went out of country?
I did. I made it back okay.
Yeah, you did.
The TSA lines were terrible.
Oh, yeah. You know what? Mine weren't bad at all. Yeah.
We had to go through customs, and then you have to go back into TSA at Miami. We were at the Miami airport. It was terrible.
Oh, my God.
Hours. We spent about 2 hours in line.
Oh, that's brutal. Do you have clear and TSA pre-check and all that stuff, too?
I do, but in customs, either it was closed or they didn't have it. So
All right. Well, Jeff Sachs, Sachs Financial, one of my favorite all-time guests and people just in general, sourdough makers.
That's me.
That's you. Yeah. So we're talking about tax season. I know a lot of people who still don't have their taxes done.
Yes. That's okay.
Is that okay for real?
Yeah. So actually, believe it or not, there's almost 20% of tax filers file an extension.
Oh. Okay.
So there's nothing wrong with that. So if you haven't done your taxes, don't freak out. It's okay.
Oh, good. Because I was freaking out a little bit. I have anxiety.
Yeah, it's okay. So the only thing to note about that, there's not really any ramifications. I think people used to believe that if you do an extension that you're opening yourself up to audits. But let's be honest, there's not that many people doing audits anymore. And they're really going after the big fish. So if you are not making millions and millions of dollars and have huge amounts of deductions, you're probably not on the radar screen, especially if you're not making, over $300,000-$400,000, I would assume, if not more.
Okay.
So if you're not ready to file, it's okay. Just fill out the form. Here's what you need to know.
Okay.
If you owe taxes, make sure that you pay those taxes. Just because you have an extension doesn't get you out of paying whatever it is that you owe. If you don't pay it, again, it's okay, but you'll have a penalty.
Okay.
So just make sure that if you think you owe some taxes, pay some money in of what you think you owe, file the extension you have till October, and make sure to get your taxes done.
Got it. 2025, the year, is not really business as usual, right?
No, it's not.
Lots of things have changed, or?
There's been a bunch of changes. There was some changes that happened in the One Big Beautiful Bill Act that passed. This is the first time in history where we have some taxes that are really, I feel like, tied to a political cycle, where they're usually, we're going to do a tax break and it's going to go for 10 years. This is specific. There are some things that end in 2028, some things that end in the 2029 tax filing season. So the biggest one is the standard deduction has gone up. That happens every year, but now it's pegged towards inflation, and it's gone up almost 8% this year. So that's number one, but that's sort of business as usual, because we now in the latest tax scheme, method, whatever you want to call it, since the first Trump administration, taxes have had a big standard deduction.
Okay. Yeah, I was going to say, I do remember having a big standard deduction before.
And this year it is, single filing is $15,750. And if you're married, it's $31,500.
I was thinking what if you're like right on the cusp at like 31,000? I mean, is it really worth trying to go beyond the standard deduction? What do you think?
I think that most people, the numbers say that about 12% of filers itemize their taxes, and that is a pain. If you don't own a small business, if you don't keep track of all your medical records, you're itemizing all of your expenses, which means you got to pour through the IRS documentation to figure out what your expenses are and what can be deducted. Most people don't have enough deductions anyway. Take the standard deduction, anything between 0 and up to that number of $31,500. And if you're over the age of 65, you actually get a little bit more, which is part of this One Big Beautiful Bill.
Okay. What else is different? What is the thing with the salt cap, right?
So the salt cap, that is the state and local taxes. It was at $10,000, and for the next several years through 2029, it's up to $40,000. So that means if you're in a high tax area, and I really think this is more for like those folks that live in Chicago, maybe like higher property areas. If you have a really big house in Ladue or something, and your taxes are pretty high, if for some reason you're able to, and you itemize, so this is key, you have to itemize for this one, you can take a bigger deduction. And it's a little bit more attractive for some people because it is up to $40,000. So that's something to think about.
Okay.
Yeah.
Okay.
That's only for a couple of years.
Okay. And then what about retirement wise?
So interestingly, if you are over the age of 65, you get an extra deduction. Now, if you're over the age of 65, you already had a standard deduction. If you were single, it was $2,000 just for being over the age of 65. If you're married, it was $1,600. And so now there's an extra one. Again, depending on your income, it starts phasing out around $75,000 for a single, $100,000, $150,000 for married couples. You get an extra $6,000 per person. So if both of you are over the age of 65, that's another $12,000 standard deduction. So if you're over the age of 65, with all of the deductions and the standard deduction, you're looking at almost $47,000 of deductions before you do anything else that's directly off of the income you earn.
Oh, wow.
It's not a credit, so you won't get cash back. But if you have $50,000 of income, you have a $47,000 standard deduction, you're paying taxes on $3,000 of income.
Oh, wow.
Yeah.
That's great.
It's great. It's
well,
great.
and I think that there are still people who are probably transitioning into being on a fixed income anyway, right?
Yeah,
I mean,
yeah. So, I mean, the whole point of that is it helps a little bit. And I think the current administration was saying no tax on Social Security, and that's really where this is geared towards. Social Security already has some tax favorable things about it, but this allows you to say, you know what, I'm taking Social Security, my Social Security increased, my fixed income is what it is, and now I'm able to pay less taxes. You're still paying taxes on your Social Security because of the way everything gets calculated. But in the end bottom line result is it's going to feel like you aren't paying as much in taxes.
Hey, we'll take that.
Right?
What about overtime? No, because a lot of people, I feel like over the last few years, we've talked about, okay, no taxes on overtime. But at the same time, it seems like it maybe some confusion on what you're really getting, but no taxes, right?
So it's not necessarily no taxes on overtime. You get a little bit extra above the line deduction if you work overtime. So we're not talking about 40 hours a week, but if you work more than 40 hours a week and you can show that, single filers, you get up to another $12,500 of deduction. Married filing jointly, it's $25,000 of more money that you can deduct. Like a lot of these things that have happened recently, there are income limits. So if you make over $150,000 or $300,000 joint, it phases out for you. But you're able to take up to $25,000 of more deductions from some of your overtime pay.
That's not bad.
Yeah, yeah. So you're still going to pay taxes. Like if you have a lot of overtime, you're still paying taxes on it.
Got it. Okay. And then there was something about car loan interest.
Oh, this
is
really interesting. So I think this was a way in the One Big Beautiful Bill to make people buy American cars. Interestingly, it just has to be assembled in America.
Okay.
Well,
isn't like the most American made car Honda or something?
Something like that. Yeah. Well, I mean, like, cause like Hyundai has huge plants and everybody does now. Right. And so this is interesting. You really have to do a little bit of digging. So you have to look online, you have to find your VIN number, and there are some websites that you can look up to see if your VIN qualifies. This is for cars that were purchased in 2025. I wrote it down, so I'm going to read it. You can deduct your car loan interest up to $10,000 per year. Again, there's a phase out. So if you make over $100,000 as a single person or $200,000 married, you don't qualify.
Okay.
Yeah. But it's interesting because it's basically saying if you bought an American car, you can deduct some of your interest.
Can it be a used American car?
Has to be a new car.
Has to be a new car. Okay.
Yep.
Oh, well, that's the thing, though. New cars, I mean, I feel like we've had conversations with people who are buying cars literally for $100,000. You know, and I'm like, what? Who's affording that?
And when interest is at 6 or 7%, it's ridiculous.
Yeah.
And what's really interesting, I just read an article. I don't have any numbers on this, but the used car market right now, especially the EV market, is hot because gas prices are what I just passed. It was like $3.65 a gallon. And there's a lot of cars that were purchased 2 or 3 years ago that are coming off lease and they're being sought after. So now the used EV market is as hot as buying a new car.
I know. Isn't that crazy?
Wild.
It is wild. And honestly, I'm not sure I do know people who have EVs in St. Louis, but I always find there are, oh, this works only if this happens, or I've been in trouble because I couldn't charge my car here or whatever.
So
I think
I own an EV.
Yeah.
I have
you do?
I do.
Okay.
I do. And I will tell you the first like couple of months, because as the battery wears down, I get nervous and I'm like, I'm at 20% and I've got 100 miles and it's at 20%, and you're thinking that's like when the E comes on the gas tank and you're like, oh my God, I got to fill up. And then you start freaking out going, well, where's the next charging station? Where can I go? And it turns out I have never had a problem.
Oh, okay.
I've never been like, oh my gosh, I can't make it. This year, I came close because I was down to about 10% of my battery. It was cold out. I went to a charging station and they were all full. So I was like, oh, I'm going to have to limp home and like charge up. It was fine. I made it home. It was great. Oh, wow. And more charging stations are popping up everywhere.
They have to. I mean, that's inevitable.
Yeah.
But do you have one gas car in your house?
We do. So Jill's got a gas car. Okay. But we drive mine everywhere.
That's great.
Yeah.
Okay, that's encouraging.
I've taken it to Columbia, Missouri. I've gone as far as St. Genevieve in my EV. So yeah, you can do it.
That's awesome. Okay, so I have a question, and I don't know if you can really advise on this, but so many people are trying to save money, and when I first got here, I remember I asked for an accountant or whatever, and I think my taxes are pretty simple.
Yeah.
But I ended up paying a ton of money. I mean, I should say, it's all relative, right? But
Did they save you some money or not?
No, and it ended up being basically like $100 a month to be on retainer, and I was like, oh wait, I don't think I'm not that kind of person. I'm like a standard deduction kind of person. Yeah. We had been doing TurboTax up until then,
right?
So I'm wondering if the standard deductions are so big now. I mean, really, I don't want to put any accountants out, but do you think people could really rely on something like TurboTax?
So I think maybe what you had was a bookkeeper, somebody that was looking at, like, if you're paying somebody on a monthly basis, they're looking at your expenses and categorizing them and all that sort of stuff. But they weren't
doing that. It was a bad situation. I mean, without being, it was.
Yeah. I think, there are some free tax filing options. I'm a big fan of using some technology to keep everything in line. One of the things that we like Mint Mobile and some of those things that used to be around, the one I like right now is called Monarch Money. It's great. It works on your phone. It works on the computer. It syncs with all your bank accounts, all your investments, all of your stuff. It's intuitive. There may be a little bit of AI in there, but it tracks everything. You can set budgets, it gets alerts, so it puts everything. You can create your own categories so that when it comes to tax time, you can really see. Now, I use it because I have a small business, so I do itemize, but most people shouldn't have to worry about it.
Okay. Any other things that we should be looking at, either whether it's this tax season or getting ready for next year to be better?
I think since we're in allergy season, no.
Oh my gosh, allergies are so bad.
So miserable.
It's pollen, yeah.
It is. I'm miserable. I'm glad the lighting is good, so you can't tell. No. So I think one of the things that we should talk about, since we're doing a podcast and hopefully this is going out to the socials, is if you're a side hustler. Okay. You have to file, if you have reported income, you have to file a 1099 on that income. And one of the things that changed is the rules for that. So if you sold stuff on eBay or Venmo or PayPal's, the rules are if you've made over $200,000 and had 200 transactions. And that's important because it went, at one point, it was down to like $600 and 200 and a couple transactions.
Right.
So people were having to file, and you want to talk about a mess. If you're not used to doing that, and you're it's a side hustle, I'm taking cash in on the side, and I don't have to report it. Well, you had to report it back then. So now the threshold's a little bit higher.
That's a big threshold.
It's huge.
I mean, if you were doing $200,000 in sales on Venmo, good for you.
Right? Yeah.
Right?
Yeah.
I mean, God.
That's a lot of stuff on the TikTok shop.
It is. But okay, so that's good then. That's actually, I think, more realistic for folks.
I do. I think so. And other than that, I would just say get your taxes done. I mean,
we only have a couple weeks.
But you know what you can do? You can still contribute to your IRAs. You can still max out some of your retirement savings. So you can make contributions in 2026 for 2025 as long as you haven't filed your taxes yet.
Oh, great. Okay. Good tips.
Yep.
All right. Anything else that we're missing?
Well, let's see. We talked about checking your car's VIN. We talked about the SALT. We talked about overtime, no tax on tips. Tips you can report. And this one is interesting. You don't have to do anything. You just have to have reportable tips.
Okay.
So it can't be cash in your pocket. You actually have to report them. And you can deduct up to $12,000 if you're single, $25,000 if you're married. So that's kind of interesting.
Yeah, that's great.
I think that's about it.
Do you get a refund every year, or do you have to pay? You have to pay.
I mean, I have to pay taxes every year. I mean, in part because of my business, we pay taxes every year, but also with both Jill and I working, we're fortunate. So we pay taxes.
Yeah. I know. I've paid. I don't know when.
There were years where I didn't pay taxes and we got money back. And I would also say that if you're one of those folks that really likes to get a tax return back, you're like, oh, I'm paying way too much in. I want you to think about this. You are giving the government a free loan. For 11 months of the year, you're saying, I'm going to give you some money to use. Just give it back to me later. They don't pay you any interest on that. Right. So if you get a huge deduction back, even though it feels nice and use it as your vacation fund, let's talk about a different way to do that so that you don't give the government free money. Yeah,
you could put it in a high yield savings account.
You could do 1,000 different things besides just let it sit there and not earn anything.
Okay. Great information. I know I would like a refund, but yes, that's right. Okay.
I'd love a refund too.
All right. And tell people where they can find you.
You can find me at 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏. If you can't spell my last name, look for retiresafestl.com.
Okay. Jeff, always a pleasure.
It was good to see you.
Thank you for being here.
Yeah.
All right. Thanks for watching Michelle on the Money.